I ain't even think. I'm like, he ain't even gonna show up.
The new Black Wall Street. Right, build wealth, build life, economic empowerment, real tips, insight on the new Black Wall Street. It's on the new Black Wall Street. He's your host.
What's going on, beautiful people, man? Thanks so much for joining us here tonight. Sheba, I see you in the lobby. I'll bring you up in just a second. Thanks so much for joining us here tonight for the new Black Wall Street special presentation, guys. Talk to you guys about your 401k. Here's the deal, guys. What you don't know about money is absolutely hurting you, and it's been hurting you for a long time. And so hopefully you're prepared tonight to get a little of what we call financial education. What I do ask of you is three things. Number one, I want to make sure that you have your questions about your 401k, TSP, IRA, 403b, whatever. Number two, you need your notebook. You're not going to remember this stuff, right? I've been studying this stuff for over a decade. And then number three, you need to bring your popcorn because you're going to be in for a ride tonight. All right. So I didn't set everything up like I normally would. Someone asked some questions, one of my alumni, and I said, okay, I'll just do this. This is something I normally charge for. But the time that we're in right now, you just need to get this information. So free financial education tonight, free financial education for the nation. Make sure you hit that like button, that share button, tag someone. Here's the deal. If you're your brother's keeper, then you should be concerned about them being broke. Okay. If we are our brother's keeper, our sister's keeper, we should be concerned about them being broke. And we understand, just if we look at our own retirement accounts right now, we're not feeling good about them. But there is actually hope, guys. There is hope. Let me bring up my alumni here. See what she got going on. She joined in a little late, but we see what we got going on. What's going on, Sheba? How you doing? Oh, we got you. You got to mute. You on mute. You got to unmute.
Hello, everybody.
What's going on, Sheba? How you doing?
I'm great. How about you?
Man, you know, I still look the same. I still got my young swag going on here.
Yes, you do. Yes, you do.
Absolutely, man. So, guys, we're gonna be here about an hour. I'm probably about an hour 15. I'm gonna try to get everything in. Sheba, you got the question started, and so I said, man, let me see if I can bring you in just so you could, pseudo act like someone else because you had a couple of questions. What I'll do tonight is you're gonna actually be learning. You're gonna learn a lot that you probably didn't know about your retirement accounts. Obviously, each account is separate or individualized, so I'm just going to be generally covering some things for you to consider and for you to know. So, Sheba, let me start with you. Let me ask you a question. What do you? Before I do that, let me introduce myself. For those that don't know, I am ERGJ, your certified financial educator. I've been teaching my community at large for over 10 years about money. Most don't listen until a time like this. I am an author of the Black Billionaires Club, which is the study of Black wealth. It's a study of the 12 richest Black people in the world today and how they built their wealth, which many of you guys still haven't gotten. But it's okay. We're here for such a time as this. And what I understand about people, period, is that they change for one or two reasons. Number one, out of inspiration. We don't normally let that move us. And then number two, out of desperation. And that's where many of us are right now. We're moving, we're changing, we're making adjustments out of desperation, and that's called reaction. And so I want to get you into a proactive or progressive state because here's the deal, guys. That's the only way that we're going to win. Us reacting to the things that happen in this world, that happen to us, that keeps us in the back of the bus. And until we become progressive, when we start driving the bus, we'll always be at the bottom of the economic totem pole. And I tell you what, one thing they don't want us talking about is money. They do not want you to understand money because once you begin to understand that in a capitalistic society, it's change. Okay. I'm trying my best not to cuss, but I'm fired up. I'm pissed off because they literally have just stolen about 50% of your wealth. And many of you guys are paying attention to the wrong thing. Okay. Hit that like button and share button if you care. Sheba, go ahead and hit that unmute button. I can ask you a question. So Vivian, okay. Good evening to you. So 401k, what do you understand about the 401k? What is it that you understand? And obviously, you know, you should invest in it. You got a job. You're like, hey, I guess this is what I'm gonna use to retire. But what do you really understand?
Not as much as I should, but I've always kind of since 2000 invested in 401k. One is I don't want to leave any money on the table, free money anyway. So what I have been doing is taking advantage, of course, of a 6% match. And what I have lately have increased it every year. Um, and so at this point, I'm at 13% investing in 401k. And of course, yesterday or Monday, I'm looking at my 401k and I've lost $10,000.
Right.
Um, and so of course that's alarming to me. Because of course, yeah, I want to retire. I do want to have funds in my retirement. And I've actually I think we're with Vanguard, so I've actually selected to be aggressive with it. So I don't know if that has anything to do with it, but I don't know a whole lot. But I want to, but of course we're in our 40s. And so I kind of feel like I'm behind on the game.
Fantastic. So, number one, let you know you're not behind in the game. It's all about really how you maneuver moving forward. And don't, I want to tell everybody, don't. I try not to shame people because of what we don't know. I mean, we understand that the lack of knowledge is, our people perish for a lack of knowledge. And it wasn't until I was about 25, 30 that I started getting hip to the game. And I said, well, wait a second. There's something else going on that I don't know about. And that's when I started taking money seriously. Everybody putting council study money. That's when I started taking it serious. And then I realized I was the youngest and the darkest person in every room that I went into. And then when I tried to bring it back to my people, and there wasn't too many people trying to hear what a young buck from Decatur had to say. So, I understand where many of us sit, just simply because it's education that you have to choose to get. It's not going to be just readily given it to you. Now, many of you guys have jobs, and that's what happened. I'll tell you what happened to me. When I was working at a Fortune 500 company, I realized I was getting these benefits and didn't understand what the hell they were. I knew I should do something with them, but how many of you guys know that understanding is a little thing? So it's a simple word in the Bible tells us wisdom is the principal thing, and in all thy getting, get understanding. Right? Everybody putting also get understanding. All thy getting, get understanding. But we seem to not apply that to every aspect of our life, especially money. We get the money, right? We ain't got no problem doing that. We know, at the end of the day, we know how to get some money. But understanding it and then become big, good stewards of it, that's a whole nother ballgame. So it's not really about how much you make, it's about how much you keep and what you do with it, and that's okay. Now, Sheba, my dear, I think, what is it? Is a famous cat or a movie or something, Sheba the Queen?
Oh, you're about to get beat up.
Anyway, so how does your 401k actually move up or down? What is it tied to?
I don't know.
You don't know? Okay, fantastic. All right, so let's take a look here. So what I'm gonna do is, well, first I think we need to understand this is all retirement accounts. Okay, I'm using 401k as an example because I didn't want to write everything else. This is your TSP, your IRAs, your 403bs. All right, all of this stuff, some of your life insurance products, they're all tied to the stock market or Wall Street. Everybody putting accounts on Wall Street. And so since we have not really learned about Wall Street, and that's where people go for money. That's where people go to get money. That's where people go to grow money. Wall Street. It's all time. So, and I want you guys to just think for a minute, right? During this time right now, there's a couple places that did not close. Number one, the airlines didn't close. Why the hell the airlines didn't close? We're talking about spreading the virus. That's just stupid, right? Number two, a place that will never close is Wall Street. Okay. Now we've learned in the good book. The good book tells us that the love of money is the root of all evil. So that should tell us to follow the money. Everybody put it also follow the money. But we won't do that, right? We won't do that. So we're gonna give y'all gonna get a lesson tonight as it relates to following the money, understanding a little bit about money. And I'm gonna break some stuff down that normally it's like at the end of this time you're gonna be able to say, okay, how much was this class worth that I'm doing for free for my people because I love my people. And I'm tired of us being hoodwinked, bamboozled, running up, playing rock and land on rock landed on us. Get understands right, Miller Vivian Reed. Get understand trying to catch up in this car. Sheba has the name of a queen. That's right, name of a queen, Queen Sheba. Wall Street's in the house. Thanks so much, Wall Street. All right. So first, let's take a look at Wall Street, Sheba. So I'm gonna share my screen here, I believe, and then we're gonna go through this together. I got my. Oh, by the way, this is my alumni. This is my sister. I grew up, man. We went to high school, elementary school, and middle school.
Elementary. We were in the what was it? Advanced class.
We've been together for a long time. We've been,
Exactly.
All right. So this right here, Sheba, this is actually a representation of Wall Street. CNN Money. We can find this on any financial platforms. And again, all your retirement products are tied to Wall Street. So as Wall Street goes, so goes your retirement. The cool thing, though, is that with Wall Street is that you can choose where you put your money, and all of them move differently, but they all compound into some effect. Now, we understand that the market is pretty much taking a dive, right? That's why you see your retirement accounts drop 10,000, 20,000, whatever the case may be, because the market actually took a dive, and I'll take a look at that in just a second. But as you can see today, right, which they're not reporting on the news, which you're not hearing about, the market was up 11% today. 11% in one day. Now, most of us, let me ask you this, Sheba, I don't know if you take a look at this often or not. Do you kind of have an idea, okay, year by year, your average rate of return? Do you know that at all?
No, I don't. I don't.
Okay. Not a problem. All right. So that's kind of so here's the first tip when it comes to your retirement accounts. You want to take a look at them every year, at least once a year. Just like you check your credit once a year, just like you go get a checkup once a year. We're talking about your money checkup, right? Everybody put also checkup, right? You'll check yourself out, your health. Well, we need to check out our wealth out, its health. Okay. So your 401k is something that you may need to change, and those changes that you make are what you call your allocations. This is just where you're going to send your money, what destination you're sending your money as you make more contributions in the future. Okay. And then there's some other things that you can do with it to be able to kind of retro things and all that stuff, but that's more complicated than I can share with you here today. But if you understand that, hey, my money is tied to the market, then Sheba, wouldn't it make sense for me to follow the market?
Yes.
Okay. All right. Fantastic. Now, so here's where we are in the market today. It's up 11% today. I'm going to click on this thing right here, S&P 500 real quick, so we can kind of get an idea, okay, what has happened since the beginning of the year. So year to date, the market has been down about 25%. Would you say, Sheba, that your 401k has dropped about 25% year to date?
Yes.
Yeah, right. So that makes sense, right? The market's down 25%. My retirement's down 25%. That's about right. It makes sense now that I know what it's tied to.
Right.
Now, the market also moves in a lot of different ways, as we see here, right? We see today's gainers, right? 42% in one day. How many guys like to have that? 47% growth in one day. How many guys would like to have that? 41% growth in one day in a 24-hour period, actually about a 10-hour period in one day. 39%, 35%, 33%. That would show enough cover more than half of your 25% loss, would it not? Sheba?
Yeah.
Now let's talk about simple math, Sheba. If your account dropped 25%, how much does it have to increase in order for you to get back to where it dropped from?
Well, I would say 25% or more.
It'll be more, right? So if you drop 25%, you actually gonna have to increase 50% to get back where you were.
Yeah.
You see what I'm saying? That's simple math, right? Going from 8 to 4 versus 4 to 8, or 8 to 6 versus 6 to 8. 8 to 6 would be 25% drop. I'm sorry, 8 to 4 would be a 50% drop, but 4 back to 8 would be 100% growth.
Right.
Make sense?
Mm-hmm.
What you doing over there? Typing, texting?
Me?
Yeah.
No, I'm looking at you. I'm on my phone.
Okay. All right, fantastic. All right, no problem. Now, these are all different industries or sectors in the market, oil, gas, and all that stuff. And here's how stocks have been performing for the year. But then this is what's very interesting here: the emotion that's driving the market. All right, the emotion that's driving the market. So emotion just means there are two emotions that people move by that causes them to either spend money or save money. That'll be fear or greed. See, but where do you think most people are right now as it relates to society, the economy, life? Do you think they're more greedy right now or more fearful right now?
I think everybody's pretty much more fearful right now.
Right. That's the common folk. Now, what do you think? Or where do you think the people who own and control and run everything? Where do you think they are right now?
I think they're taking advantage of the fact that we're down.
Right.
So
do you think they're scared or do you think they're greedy?
I think they're greedy.
They're greedy, right? So it stands to bode well that the people who are in a greedy position right now, where everybody else is fearful, are putting themselves in a position to get rich. Would you agree?
Yes.
All right, let's keep going. Now, what I'm gonna pull up right here is the fear and greed index. Okay, this is very interesting to me because I just started studying this, and I'm like, wait a second. Right, we went down. We was at like a 3. Like previous close was at a 5. Last week was at a 5. A month ago was at 44. A year ago was at 56. So a year ago this time, everybody was buying. A month ago this time, we started to get a little crazy going on at the beginning of January, middle of January, something like that. I mean February. But last week, extreme fear. That's when we first heard about this whole pandemic. Like this thing could be real. But look where it's at today. We went from 5 to 13. What happened to increase people's feeling as it relates to the market? Why are we at a 13 today versus a 5? I mean, what really has changed from yesterday to today?
I would say a lot of people are buying. Some people are taking advantage of the fact that the market is down. So some people are buying.
Yeah, some people are buying, but how many of us understand that some people are buying? The use and eyes of the world don't really matter. We don't move the market.
Right.
Who's the people that move the market? The people that got big money.
Right.
Okay. So it seems like they're putting money back into the market. That's kind of crazy. While everyone else is fearful. Everyone else is dealing with lockdown. Everyone else is dealing with, man, what am I going to do? That's why I've been telling people, y'all been looking at the wrong stuff. Stop watching the news. Follow the money. Y'all are paying attention to the wrong stuff. This has everything to do with your wallet. But you keep sharing all the media that's been lying to you forever. Why are you sharing that stuff? They've been lying to you forever. But now you want to share it and talk about it and be about it. This is all about money. We live in a capitalistic society. It's all about money. If y'all don't get that by now, this is why we as a people don't come up, because we're focused on the wrong stuff. Is this making sense? Now, I wanted you to see the market real quick before we start talking about 401k. Do you understand now, Sheba, that your retirement is tied to Wall Street?
I do.
Do you understand now that Wall Street never closes?
I do understand.
Do you understand that the market is swayed by how people feel as it relates to life and economy and things like that?
I do. Yeah.
Do you also understand that rich people think different than poor people?
Yes.
Do you also understand that the rich rule over the poor?
Definitely.
That's biblical, by the way. That's biblical, by the way. All right.
Mm-hmm.
Let me do this. Any questions about it? Let me try to catch up with his comments, see, because we're going to get into this thing. All right, good evening. So first tip, do a mental checkup, do a wealth checkup, take a look at your accounts. This is something it's got a habit that's got to be increased. Like, you're not going to know, just at the top of the year, what are the things I need to check on? My annual checkup, my credit report, okay, my retirement accounts, you know what I'm saying, my health and my wealth. Everybody putting also health and wealth. These are the main things you want to check on every year, your health and your wealth. Okay? Now, I know it's like the top of the year, you'll be thinking about the gym, you'll be thinking about stop smoking, whatever. But can we do like, okay, it's time for me to get my ducks together. I need to make sure I do a checkup. Okay? What's going on? How you doing, Miss Allison, Miss Williams, thanks so much. Media, absolutely. Are they prepping for stimulus? That has nothing to do with it. Big company. You think it had, that's the, okay, so Destiny, are they prepping for the stimulus? That's the common people. That's the surface, right? They want to get you prepared to get into the market after them so you can make them rich. This is a game, y'all. I'm telling y'all, it's a sick and twisted game. And many of you guys are not going to understand what the hell I'm talking about right now, but that's okay. Just try to take in what you can take in. You need your questions. You need your notebook. You need your popcorn. Okay? Questions, notebook, and popcorn. Health and wealth. Health and wealth. All right. So if you and I, if you were running this whole shebang, Sheba, and you said, man, if I can just manipulate things to a certain extent where I can get rich, and if the only thing you were worried about was you getting rich, wouldn't you put yourself in a position that you get into a position first? Kind of like network marketing, right? It's the people who get in first that get all the money, and then all the people that come in at the 333rd position, they be trying to figure out why they can't make no money.
Right.
Okay. So what we want to do is we want to get in before them, which means that we're going to need this thing called foresight. We're going to need to think ahead, right? So, Steve, let me answer this for me. As it relates to the market, what industries, and you guys in the comments below answer this as well, what industries took the biggest hit because of the coronavirus pandemic? What industries took the biggest hit, or what places, if you don't know industries, or what products or what services took the biggest hit?
I would say airlines.
Airlines? Isn't this interesting? Though? They didn't call it the airlines, but the airlines took the biggest hit. Anybody else? What else? Anything else? Sheba?
Um,
I'm gonna make you think, girl.
I see. You know what? I really, I just know the travel industry and the airline industry. I wouldn't say like the gasoline or that industry because, well, I don't know.
Okay, let's just go with airline. Let's just go with airline. What's going on? Let's go with airline. So if the airlines did not close and they still letting people travel, then that tells us, right, that the airline industry isn't going anywhere. Can we agree on that?
We can.
Okay. So then is it safe to say that the airline industry will also recover as we get through this?
Yes.
And if we can agree that the airline industry will recover, do we want to get in front of it so that our money can recover with the airline industry?
We do.
We do. Okay. All right. That's my girl right there, but I don't know how far we go back. All right. So now let me pull up a little something else. And see if y'all got any questions. I got to pull up another screen. I might be off for a little bit. At some point, please talk about Bitcoin and digital money and how to take advantage of that. I will. It won't be here because they can't take advantage of that with their 401k. I'll be doing a Bitcoin presentation next week. And I do this for guys that don't know. I go live every morning, 8 a.m. Eastern Standard Time. I teach every morning about this stuff every morning, Monday through Friday, not Saturday and Sunday, because I got a life too. All right, let me see if I can pull this up, guys. All right, so let's get into understanding your 401k. I think this is
now. And I had one of my friends to also comment on our thread that we had on Facebook, and she was talking about investing. She invests up to 40 to 50% of her income.
Yeah, let me answer that for you. All right, second tip. When it comes to your 401ks, I want you guys to understand this, is you do not need to go above your match. Go to the point, invest to the point where you get the free money. Now I'm going to tell you why. Because there's way more options. Everybody putting down some options. There's way more options available for you beyond the company's structured investment opportunity for you outside of the company. So when you go with a company, let's just say I worked at Coca-Cola, right? Me working at Coca-Cola in our 401k plan, do you think I had the option to invest in Pepsi?
No.
No, that would be a conflict of interest, right?
Right.
But it already tells you that their plan is going to be constructed to the companies that they want to offer you. But there's over 10,000 companies in the stock market. Do you think that Coca-Cola would have been like, hey, no problem, go ahead and invest in marijuana?
No.
No, that probably goes against their ethics, right? So you probably look, I'm looking for a marijuana company, but that goes against their ethics, so they're not going to offer that to you through your group plan. Does that make sense?
It does.
Do you also think that you could have saw something like a 40% return in your 401k? Like I just told you in one day.
That's true.
Probably not, right? You see what I'm saying? So I'm gonna talk to you, I'm gonna teach you guys about what the 401k is. Its limits. It does have some benefits, but those benefits are very limited. Okay. So when you get past that, now let me ask you this, people. We talk about your friend who is 50% into the market or into her 401k or her whatever she's got. If she's at 6% or 10%, that gives us another 30% to go out and start making some real money with if we understand the market. Right?
Right.
So instead of getting, let's say, an average of about, now the average rate of return in the stock market is about 8%. Over the past 4 years, you may have gotten maybe a 12%, maybe a 15%, something like that. But how many guys know some people getting 40, 25 and 30%? Because they're not limiting their options to just a 401k. Now, here's the good news. It's great that you are doing something, but doing something is great, but how about doing something better, being better? Does that make sense? All right, so I think I got this. Let's see if how does this work? Oops. What did I do? Oh, I think I did. Oh, let's see here. Did I do? Oh, I'm trying. Let's see if it changed. Did it change? Yeah, it changed. All right. So let's get into your 401ks, guys, your IRAs, your TSP, because in all thy wisdom, get understanding. So in order for you to actually do better, you have to understand what you're dealing with. We now understand it is tied to the stock market. Now we must begin to understand the product itself, because it's just the product. It's just the tool, okay? And this is something I do with my clients. It's typically something that people are paying me a lot of money to do. I'm doing it for y'all because we need it.
Yes, we do.
We need it. All right. All right. So what's your 401k? 1978 Section 401k of the Internal Revenue Code authorizes the use of a new type of defined contribution plan that allows for the employee to make pre-tax contributions to the plan. So it's an employee pre-tax contribution plan. Right? The 401k is a retirement savings plan sponsored by an employer. This is why the employer works with the Vanguard or the Transamerica to come up with options for you as a worker. It lets workers save and invest a piece of their paycheck before taxes are taken out. Taxes aren't paid until the money is withdrawn from the account. All right. A TSP, some of you guys have. This is a thrift savings plan. This is something that many of you guys are not taking advantage of, which I use to actually quit my job. A thrift savings plan is a retirement savings and investment plan for federal employees and members of uninformed services. It's a thrift savings plan. Oh, no, I don't use a THP. I use an HSA. Anyway, this is for government, right? Government employees. You guys don't have a 401k. We just take the 401k away and we just take TSP. Same thing, though. Right? Thrift savings plan is the defined contribution plan designed to give federal employees the same retirement savings related benefits to workers and private sector. So we have 401k, private sector, or regular job. TSP, government. But it's the same product. It's just called different things because they're tying it to federal versus private sector. Thrift savings plan offers 6 different funds. Typically, you'll see only 6. So with your 401k, you typically have about 10 different funds. With a TSP, you only got 6 to choose from. Government security fund, a fixed income fund, common stock fund, small cap stock fund, international stock fund, life cycle fund. Now let's try to understand these words. Funds, government security fund, that's typically going to be your government bonds, where you're actually lending money out, letting the government use it, right? And then they'll get you back a return. This is a very stable type of fund. Fixed income fund, very similar as well. That'll be into mutual funds, things like that. So you really don't expect a lot of growth with your fixed income stuff. That's just really for you to protect, right? So you have different funds that'll be for your aggression to grow, right? And then you have funds for the conservative people who just want to protect. So let's say this again. Everybody putting out, so aggression equals grow. right?
Aggression.
Just say that again for me. See, we sound better coming out of your mouth.
Aggression equals growth.
Right? Conservative equals protect.
Conservative equals protect.
Right. So in a market like this, if we had the foresight to see something like this coming, do you think we should be in a position, see, with our retirement accounts that we want to be aggressive during a time like this, or do we want to be in a conservative during a time like this?
Okay, my first thought would be, okay, I want to be conservative, but I know with you educating me, I want to be aggressive.
Well, so that's a twofold answer. So if we had seen it coming, we want to be conservative because we want to protect.
Right, and not lose.
Right.
Gotcha.
Well, you may lose. Let's not get it twisted. You may lose, but if the market goes down 25% and your money only goes down 2%, did you win?
Yeah, I would think I did because I ain't lose as much.
Absolutely, right. Everybody else lost 25, 30%, but you only lost 2%. That's a win.
Right.
Now, if the market goes up 20% and your portfolio goes up 30%, is that a win?
That is a win.
That's a win. Now, if the market goes up 20% and your portfolio only goes up 10%, is that a win?
It's still, in a sense, I mean, you made some money, but you didn't make as much as you could have.
So it's a smaller win. It's a win, but we missed some opportunities, right?
Exactly.
So it's still a win. Now, if the market goes up 10%, but your portfolio goes down 5%, is that a win?
That's a loss.
That's a loss, right? So that means that would tell you that something is wrong.
Mm-hmm.
That's what we got to start fixing. But we wouldn't know that, see, unless we knew how the market did. Would you agree?
I agree.
All right. So then you have your common stock fund. That's going to be for your where all of your large companies are. Common stock just simply means all of our domestic large companies like Apple, companies like, probably Microsoft, Home Depot, stuff like that, right? Then you have your small cap stock fund. These are going to be smaller companies that have room to grow, right? And these are companies that are kind of newly formed. They're still trying to get market penetration, and they're going to give you opportunities in there for growth, okay? And then you have your international stock fund. That's going to be basically foreign companies that you can invest in. Companies like Alibaba or Hershey or something like that, Toshiba, Chinese or, wherever they're at, right, type companies. Then you have your life cycle fund. We'll get in that in just a second because many of you guys are probably in some type of life cycle fund or target date fund. What type of fund do you, if I just mentioned those words to you, for you, Sheba, would be target date fund or 401k. Do you think that you are in a target date fund, or did you actually select some particular funds yourself and then allocate 20% here, 10% there, 40% here? What do you think you did?
I think, and I do kind of look at my 401k probably once or twice a month, Evan. So, I think mine's is like you get to elect. Well, with my job, you get to elect if you want to be aggressive, moderate, or if you just want to kind of be in a stable, fixed fund or investments.
Right.
So I did select to be aggressive because, like I said, our age and all that kind of stuff. So that's where mine's is.
Okay, fantastic. All right, so they're saying, hey, with yours, what you select, say, hey, I want to be aggressive. I'm trying to catch up, so I'm going to go aggressive. I don't really know what that means, but it feel like I'm going to be able to make more if I go aggressive. I got you, right? So let's talk about how these things are set up. All right, I see Mick says, thanks so much, Vivian Reed. Fang stocks, absolutely. Luke and Coffee, yeah, that's going to be an international stock. All right, let's keep going. You learning something, Sheba? Is this good stuff?
It is. I'm learning. Yes.
All right, fantastic. All right, again, guys, if you're your brother or your sister keeper, again, hit that like button and share button. If you care about the wealth of your neighbor, hit the like button and share button. Tag somebody. If you got a mom, a dad, an aunt, a godmother, godfather, you know what I'm saying? You're like, hey, you need to log on and get. You've been asking about this stuff. Now's the time, right? Let's get it. All right. So what to do with you? I don't know where I put it at. Let me keep going. All right, we're talking about your 401k retirement. I got to click over here. All right. Your IRAs. All right, IRA is an account set up at a financial institution, so you're probably stepped away. You went to Vanguard yourself. You may be a self-employed, something like that, so you don't get the benefit of 401k. So you need to go set up your own retirement account. That'd be your IRA. You got 3 different types: traditional, Roth, rollover. Rollover would be, hey, you left a job and you're going to roll over your retirement from your previous job into an IRA. I'm not going to get into the dynamics of these IRAs, or maybe I am. I'm not quite sure. I haven't done this presentation in a while. So traditional IRA. So you got basically 2 different IRAs. Traditional IRA is an individual retirement account at which you contribute pre-tax or after-tax dollars, and which allows your money to grow tax deferred. So traditional, tax deferred. Everybody put that traditional, tax deferred. Roth IRA is a retirement savings account that allows your money to grow tax free. Tax free, right? So tax deferred versus tax free. I don't want to get into the schematics of this because it's something that I really want you to get with a tax professional about. But these are strategies that you're able to use. And you want to be in different buckets. You want to have some tax deferred, some tax free, some pre-tax. You know what I mean? So this when I said earlier, Sheba, that hey, your 401k, you know that's pre-tax, right?
Mm-hmm.
But you don't have anything that's in some tax free. Maybe.
Right.
I don't know. I don't know what you have, but I'm just assuming that you don't have anything that's tax free.
I don't have an IRA. I don't.
Okay. So then so we can say, hey, that extra 7% that you were putting into a 401k where you're no longer getting a match, you can take that money into your own control, right? And you can say, hey, I'm gonna go shopping, right, for money. I'm gonna go shopping for wealth. Everybody put in console shop for wealth. I'm gonna go shop for wealth. It's my money, right? There are other options out there. I may not have known it then. I know now. I'm gonna go shop. And I want you guys to understand with every product that you use, from your checking account to your savings account, to your brokerage account, to your mortgages, to your auto loans, to your student loans, anything that's got to do with you getting some money, you can stop. And the problem we find in our community is we just take what they give us and not realizing you got leverage. Your leverage is your option. Your leverage is your ability to say no. I don't want that. Oh no, that's 25%. I'll pass. Oh no, that ain't gonna work for me and my family. We'll go check out the credit union. Oh no, everybody put in console the power. No. So many of us don't think that we have the power. We think we're subject to whatever they give us, not realizing, wait a second, if I just shop, someone wants to my money, or someone wants to lend me that money. If I just shop, I'll find someone that can actually meet my terms that are reasonable. The power no. Now, Sheba, be honest with me. You ever went anywhere, bought anything, whatever the case may be, credit card, whatever, and you just said, I guess this is what I got to take?
I have.
Yeah? How long ago? When's the last time you did it? Just, whatever. Nice shirt, nice purse, whatever. Let me go ahead and sign this credit card. I guess that's what it is. Make it happen.
I'm doing better. Let me say that. Years ago, I probably would have been like, yeah, okay, that's what I got to pay. But I'm trying to be a little bit more better when it comes to my money.
Okay, absolutely, right?
Yeah.
So then now we start getting into the market itself, guys. It's only 2 things: it's stocks and bonds in the market, Wall Street, for the most part. We can have all these different type of products that are derived from this, but the basics of Wall Street is stocks and bonds. Now, if you've been paying any attention, to interest rates and stuff like that, that has a lot to do on the bond side. That has a lot to do with lending. And how many guys have heard this scripture before? Said, you shall be a lender, not a borrower.
Mm-hmm.
You shall be a lender, not a borrower. Where are my church folk at? You should be a lender, not a borrower. Now, let me ask this straight up real question. As many times as we've been preaching that in school or church or whatever around the way, how many of us actually put ourselves in position that we're a lender? Now, remember, faith without works is dead. We can have a faith that we're going to be a lender, but we're not working on being a lender. That's why money's not coming to us. We're actually paying it out. Now, what's his name? What's E equals MC squared? What's his name? Oh, Einstein. Einstein said that those who understand it earn it. Those who don't pay it. What is he talking about? He called it 8th wonder of the world. He's talking about compound interest. When you're a borrower, you are paying compound interest. When you're a lender, you're earning compound interest. Now, it's no mistake, but if we want to be rich or wealthy or retire in a good state, do we need to be borrowers or lenders?
Lenders.
Lenders. So here's the concept of retirement, okay? The concept of this thing we call retirement is that over the years or over time, you build up your nest egg, your capital, like 100,000, 200,000, 500,000, a million, or whatever. You just keep working to build up. That's where you are in your aggressive state. I'm building, and it's going to be aggressive. But then over time, you get to a point where you realize I got so much stored up that now I can actually lend it out into a fixed income product or to some government bond or something like that, where my money's protected, and I may not be getting a 20% or 15% increase, but shoot, I got a steady 5% coming in every year because I'm a lender instead of a borrower. And so when we get to the bond side, Sheba, that's where we actually are lending our money out to the government, to corporations, things like that. Does that make sense? Mm-hmm. Why you looking like you just? I'm reading. Okay. I don't make sure I ain't being too rough on them, Sheba. You know, I got to check with my alumni. Let me know I'm doing a good job.
No, you're doing good. You're doing good.
All right, so the stock, man. The stock is a type of security that signifies ownership. Everybody put in comments, so own. Ownership in a corporation represents a claim of a part of a corporation's assets and earnings. So if I were to invest, in Apple, then I would actually be a part owner of Apple. I would participate in the assets in which they acquire, and I would also participate in the earnings which they bring. That's why I say participate in their profits, because as an owner of Apple stock, I'm participating in the profits of the corporation that brings these wonderful, great products to our that we value in our community. A bond is a debt investment. Debt meaning, okay, I'm lending out, someone owes me, so they'll pay me back with interest. Everybody put in console with interest.
With interest.
With interest. In which an investor loans money to an entity, which borrows the funds for a defined period of time at a variable or fixed interest rate. So you become the bank to someone else. That makes sense, right?
Yeah.
So that's the real basic understanding of stocks, bonds, which really the whole financial system is built around. Lending, right, and investing. Investing meaning I'm giving money to a company to allow them to be able to grow. Amazon opened up their facility down on Rainbow Drive or something like that, and now they're burning all these jobs, and I feel good because I helped them to do that, and they reward me with the appreciation of their stock, and then my money that I've invested into them continues to rise. That's going to be appreciation. You still with me?
Mm-hmm.
So now let me catch up on these comments. Woo! Y'all gonna learn today. Those that want to learn. Everybody don't want to learn this stuff. That's okay. Traditional tax deferred. Traditional tax deferred. Right? Traditional tax deferred. Shop for wealth. Absolutely, man. Shop for wealth. Shop for wealth. Shop for wealth. All right, gotcha. Power of no. The power of no. That's right. The power of no. So, Sheba, what do you understand so far before I really get into your 401k? What's something new? What are you beginning to say? Oh, what's starting to make some sense?
A lot of it is kind of making sense. Especially with you, talking about me investing over my 6%. We talked briefly on Facebook because I said I also invest in my company stock too, and you said I shouldn't do that because that's kind of what is the word? I'm not necessarily looking at everything that's available to me or all the investments that I could be making because of my company and them kind of being fixed as to what they want me to invest in and what what I can and can't invest in.
So let me clarify that, right? I'm not saying don't invest in your company. First, we want to make sure that we feel our company is a good investment.
Okay.
Just because you work there don't mean it. So let me give you an example. When I work for Coca-Cola, when I start looking at this landscape or the outlook of Coca-Cola, I did not think that Coca-Cola was a good investment.
Okay.
Although I worked there, I didn't necessarily take my extra funds and put them into Coca-Cola. I went outside of Coca-Cola and I started investing in Pepsi.
Right. Gotcha.
Now, what I said to you though is I said, hey, you got to understand your match. What they're matching you with is actually company stock.
Right.
It's not money, it's company stock. So your 1% or 3% or 6% match, that's actually company stock. So you're already getting company stock. That's what I'm trying to infer. And if you really like the company, after you evaluate it, you look at it, say, man, not only do I work here, but I understand everything with the company. I see where we're going. I see how we've grown. I see how stock performs. I know what kind of money we're making. I see the trajectory where we're going. I understand that we're building or growing. We're hiring, right? All these different things that come to being a great company. Then you say, man, I really, I'm going to ride this thing till the wheel falls off.
Gotcha.
But you could be at a company that you like, yeah, I don't really know what's going on around here in this piece. And you got inside information because you work there.
Yeah.
So I'm not going to ask you what company that you work for, but that'll be something if you want me to evaluate it for you, we can do that offline because I don't, that might be something private or whatever. So, but does that make sense?
It makes sense.
All right.
Yeah.
All right. So in your 401k or your TSP or your 403b, 403b is for teachers. You're going to have either a balanced target date funds, or life cycle funds. Now, what this is that this is where you actually put your retirement on autopilot. Everybody putting console on autopilot. This just simply is going to take your current age and you're going to put it out to your target date of retirement. For example, Ashiba, said we're 40 years old now, and target date of retirement is going to put us at 65. So it's going to be a 25 years from now, which will put us at 2045. So you're going to see an option for 2045 or target date fund, pallets fund, life cycle fund 2045. That's just simply saying that, hey, I don't know nothing about this retirement stuff. I know that I know I'm expected to retire in 2045. So I'm going to put all my allocations into this one balance target date fund. Now let me help you understand what the balance is. When you're younger, that target date fund is going to be more aggressive automatically because it's saying that, hey, it automatically knows you have time to recover should something go awry. So it's going to try to build up your capital automatically, right, by itself. Well, not by itself. Somebody's managing it, but pretty much by itself. Then as you get older, if you think about that little thing we saw, like a speedometer, and right now you're younger and you're over here, like heavy aggression. As you get older, right, 5 years, 10 years, 20 years, 25, right? It's going to get all the way over here to conservative on its own. Does that make sense?
Mm-hmm.
So it's literally trying to actually kind of protect you from yourself or protect your own ignorance because you just simply don't know. Now, this is not something that I recommend for those who know. It's something I recommend for those who don't want to know, who don't never want to come to a class, never want to sign up and learn what they don't know. Great. But once you know, you realize, wait a second, I'm actually paying someone else to manage my money, and they take absolutely no risk if I lose. I really want you guys to understand that. How would it feel, right, if you were actually paying someone for your 25% loss, and they're getting a 3% every year of what you have invested, and they have absolutely they don't take the hit with you.
Right.
But they didn't protect you. Now, let me ask you guys a question in the comments below. For all that got a 401k, you got a TSP, you got an IRA, you got a 403b. When the market started to collapse, did any of you get a call?
No.
They said, hey, Sheba, hey, I've been watching over your thing. You've been paying me, and I just want to let you know maybe it's time for us to make some adjustments.
No.
Did anybody get a call from their money manager saying, hey, alarm, there's some things going on, and we want to make sure, because you are such a value customer to me. I mean, you've been paying me for years. I mean, I sent my kids to college because of you. I'm living off in the Bahamas because of you. I got the house of my dreams because of you. I'm driving the car that I want because of you. I'm sending my kids to the best schools in the city because of you. And I want to make sure that you are taken care of, that your money is taken care of. Anybody get a call?
No.
You see the hypocrisy in that? I pay you, but yet you can't call me to inform me when something's going wrong. To me, that's a big problem. And that's why I do what I do. I'm tired of us getting screwed over.
Right.
Okay? So let's keep going. I hope I'm making this. I hope I'm making my point. Right. So we understand balanced target date funds. Guys saying, hey, man, it's going to automatically do it. We're going to be paying some money to do it. They're going to make some adjustments. They're going to put some stocks in, some stocks out, whatever. And we can just, out of sight, out of mind, and we can just hope. I want you guys to understand that hope is not a financial strategy. Hope is not going to make sure that you retire rich. You got to take control. Everybody put guys on take control. You got to take control. But you can't take control without knowledge. Really without wisdom. What I'm giving you right now is knowledge. What you do with it turns into wisdom. All right. Oh, okay, let's go. Where we at time-wise? Where am I at? What time you got, Sheba?
8:51.
All right, we right on time. So I just told you guys about the balance funds. This is the best option for you passive investors. You don't want to look at it. You don't want to learn. You don't care. You just hope it works out. You cross your fingers, and then you might find yourself working at Walmart when you retire. That's okay if that's your choice. Okay. Then we have the bond types, guys. So the bond type, these are different types of bonds. You got TIPS, which is Treasury Inflation Protected Securities, mortgage-backed securities, investment-grade securities, government bonds, treasury bonds, corporate bonds. What you really just simply need to understand here is this is you lending your money out and them paying you back a percentage or interest or a rate over time. Now, interest rates being so low, if you think about a bank or something trying to lend or borrow from you, then it should automatically tell you that those bond rates are pretty dang on low, right?
Yeah.
So I'm not going to really be getting a whole lot back, but if you want to be protective of this big mass of fortune that you've built up over 30 years, 40 years of working, then that might be something that makes some sense. But if you're trying to grow your account, that don't make sense right now. Am I making any sense?
It doesn't make sense to you saying because of the fact that the bonds, because the interest rates are low.
Right.
Is that what I'm understanding from you?
Yep, absolutely.
And so therefore you won't be able to get the maximum amount that you need to get or to take advantage.
Well, what you're saying there is relative. What I'm saying is they'll still pay you something back, an interest back on the money in which you lend them, but that interest rate is going to be super low.
Right.
Okay, that's what I'm saying. All right.
Yeah, gotcha. All right.
Now we have our large cap. These are going to be companies. It's in the stock market that capitalization value over $10 billion. These are large companies or large market capitalization. That's why they call it large cap. You'll find these if you have a government account or you work for the government. You'll find these in your common stock fund. If you're on 401k, you're going to see large cap. That's what it's going to say, large cap. You just know that these are huge companies. All right. So here's some large cap companies. This was made a long time ago. I probably would have took General Electric. It's still a large company. I would have took this off by now. But Apple, Microsoft, ExxonMobil, Google, General Electric, Facebook, Disney, these are all large cap companies. Large. The kind of companies like, man, it probably ain't going nowhere no time soon. It's the kind of companies, Sheba, that you say, well, hey, if we do have a recession like we're in now, then they're more than likely going to survive and buy out all the other little companies that couldn't make it, right? They couldn't make it through the troubled water. That makes sense? Jay, now you still with me?
I'm with you.
Okay. That makes sense? I guess that makes sense.
Yeah.
Okay.
Yes, it makes sense.
All right. Then you have mid cap. Mid cap are going to be your companies with about $2 to $10 billion in worth, right? Mid cap is just an abbreviation for middle capitalization or mid cap stocks. All right, you're gonna find these in your government accounts if you've got in your small cap. They put the mid cap and the small cap together for your TSPs if you have those. Companies like this will become up and coming. Some of these may have changed, but like a Ross, a Moody's, a Chipotle maybe a large cap now. I'm not quite sure. Monster Beverage, O'Reilly's, Alcoa. These are companies that you may not have heard of. Some of them are. They're O'Reilly's or something like that. These are, they're not super huge. They're more regional. They may not be all across the nation right now. But this is going to be your mid cap company. Small cap is going to be anything below 2 billion and upward of 300 million. Again, it's going to be in your you'll see small cap, and then you'll see your small cap stock fund if you have a general if you have a government account, if you work for the government or federal government. Now, let me ask you this, Sheba: small cap, mid cap, large cap. Small cap, mid cap, large cap. Oh my! Small cap, mid cap, or large cap. Oh my! Of these, if you say, hey, I'm about aggression, which means I'm looking for something that gives me the best opportunity for growth, small cap, large cap, and mid cap, would you say, out of those three?
You sure you want to ask me that? I don't know. I mean, my gut says go with large cap.
Go with large cap? All right. So if I'm looking for aggression and growth, right, this means that I can grow into new regions. I can grow into new parts of the world. I can grow into the market, right? Then I'm growing from small to big.
Right. So you will go with a small cap. Is that what you're
Small
saying?
cap would dominate my portfolio if I'm really looking for aggression. Right?
Gotcha. Okay.
But then there's also this thing in the large cap called growth stocks. All right.
Okay.
So growth stocks, you can still be a large cap, which gives you some protection from from being gobbled up by the economy, right? Mm-hmm. And it could be something that's considered a growth company, right? So a growth company would be something like a Facebook, right?
Okay.
And if you know anything about Facebook, since you started using it, it's grown tremendously. A growth company would be the FANG stocks: Facebook, Amazon, Netflix, Google, something like that. Right? So more technology stocks are real growth stocks. You're just looking for, you're just looking for up and away. Right? They're also typically something that has to do with current trends, right? So let's talk about some trends that are happening in this world. And we see they're coming down the pipe. They're going to be probably more, what you would call more relative, more now. They're up and coming industries. If I were to ask you, what's an up and coming industry that you are familiar with, what would you say? Something that's on the rise. It's not quite established, but it's on its way. And for anybody in the comments as well. Industries that are on the rise. We see coming down the pike. They're taking over the world. We know we're going to be in Jetsonville pretty soon.
I would say, what about, I hope this is not so stupid, but to me, I think like Uber and those Uber Eats and things, they're on a rise too. They're kind of taking over too. I mean, a couple of years ago, we didn't have that. So I don't know if they would be considered as a large cap company. I don't know if they've made it to that point yet.
They're not large cap. They're not large cap, but growth, quite possibly, yes. So we're just talking about what's coming down the pipe, right? So Zoom, that's a good example, right? Now we're right now doing virtual, right? We're virtual. Zoom is going to be a company that's allowing us the software to be able to do that. That's a good one. Delivery-based industries, like you just said, any type of delivery. It's going to be less in-person stuff and more delivery stuff. We can also talk about self-driving cars, which would be technology. We can talk about drones, right? This is all technology that's coming down the pipe, right? So Instacart, right? All these delivery type things, vehicles, SpaceX, right? Stuff like that. Cannabis, well, we understand that we're starting to, this is stuff. So these are growth opportunities that may not necessarily be available in our options through our corporate plan, but we begin to understand this stuff is about to happen. I mean, we can watch it happen or we can participate in it happen. And at the end of the day, we're going to make it happen because we typically, as our community, we're the ones that set the trend. We be like, oh, y'all heard about this, and the next thing you know, everybody wearing it, and the next thing you know, every other community is actually profiting off what we're doing. We brought back the fanny packs. You know what I'm saying? You know what I mean? So, it get real when you start talking about money, right?
Right.
So telephone, telecommunications, Tesla, up and coming, e-learning, absolutely. The whole educational system is going to change. Cash App, which we are now, all these forms of alternative banking, alternative learning. You're trying to think. Come on now, Shiva. Come on, give me some more. Ain't got no more?
No, I'm looking at everybody else's comments. It's great.
A large cap company buy out the small cap company you have the stock with. Does it affect that your investment? Yeah. So if you have a small cap company or a small company, it gets bought out. What happens is the large company makes an offer or a bid for that small company. So let's just say you own that company, and that company at the time that you own it was a $50 a stock, right? $50 per share. And the company made an offer and it was accepted. And now that offer that they made was like $75 a share. Well, your value of your stock is going to rise $25 or 50%, right? And you just made 50% more than what you had just by being in the company that got bought out and it had a good offer on it or a good bid that was accepted. That makes sense, right? Okay. So then let's ask this other question. So small cap, mid cap, large cap. If I'm going conservative, I'm saying, man, I just want to be kind of, I want to be kind of safe. Small cap, mid cap, or large cap?
Well, okay, so I know I said large cap before, but I probably would stay with large cap because it seems like large cap companies are the ones that are they kind of maintain for whatever.
Absolutely. Absolutely. Those large cap
whatever goes on, even with the situation with what we're going through now, it seems like that large cap companies are the ones that are like they're still at the median. I would say they're not losing a whole lot.
Right.
Because they're stable.
There you go. That's the right word. Everybody putting comes so stable. Now, we're not saying that all large cap companies are stable, but just the general idea that a large cap company is stable. So it's something I can count on. I mean, Disney isn't going anywhere anytime soon. If Disney was to go out of business, America wouldn't be great anymore. Okay. Okay. So
right.
Keep that in mind. All right. So it's starting to make some sense now, right? So you're going to see in your 401k, you're going to see all this stuff is going to be like, Vanguard 500, blah, 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 large cap. Vanguard 250, roll, blah, 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 small cap. All this stuff, all those different funds, you're going to be able to understand them a little bit better. You're like, oh, small cap. Okay, there's going to be a whole bunch of small cap companies in. Oh, large cap. It's going to be a whole bunch of large cap companies. Right? Make sense?
Makes sense.
All right. Goodyear, Rite Aid, Extra Space Storage, E-Trade. That's back when I did that. Small cap companies, give you an idea there. You got international companies. I'm going to kind of move fast with this. Obviously, there's going to be companies that are outside of the United States market. There's going to be more foreign companies. Nestle, Royal Dutch Shell, Toyota, BP, all of those GlaxoSmithKline, those are all international companies. Then you have special sectors. So sometimes in your retirement accounts, outside of the government accounts, they have special accounts. They've worked with the brokerage firm and said, man, we want to offer our employees the opportunity to invest in real estate. We want to offer our opportunity to invest in precious metals, which would be gold and silver. We want our employees to be able to invest in healthcare or energy. So they do create these special funds that may give you access or give you access to be able to invest in some of your special sectors, and it'd be very minimal. Okay, so I'm not sure what you have. That's going to be all individual, but they do offer those across within your 401ks or 403bs, and then IRAs is something a little bit different. All right. So have you seen any? You said you look at it. So have you seen any funds that you're like, wow, okay? And you seen any words like this, energy fund? Okay.
But now that you've kind of explained to me, now when I go back and I look at it, like if I look at it tomorrow, it'll click. You know what I mean?
Yeah, absolutely.
So then I can answer your question properly.
All right. Then sometimes they'll offer you a self-directed brokerage account. Now, what this is that, say, like when I worked for Coca-Cola, I worked Transamerica. We went through them for our group plan, but then they would have a special offer and say, hey, if you want to individually invest with us because you're an employee with Coca-Cola, we got a special offer, maybe $50 to your first trade or something like that. They start trying to get you to invest with them as an individual, and your corporate account gives you the ability to get a deal to be able to actually invest in self-direct invest through that company. Okay. So this is a great way. This is one of the best things I think of the 401k. If they offer this, because you can literally establish your own individual brokerage account that's still yours when and if you may leave the company, and you have been self-directed and you got the deal. So there are some benefits that come through your jobs, more benefits than you know, just because we don't know. Now, here's an idea of how to allocate your portfolio. Okay, we understand the large cap is stable. Large cap also may pay some dividends. So notice that my portfolio, generally speaking, I'm gonna have a large portion of my allocation going towards large cap stocks. They're the most stable stocks, right? I may have a little bit of into the mid cap, and I may have a very small portion into the small cap. Because that small cap that I pick blows up, great. But if it doesn't, that company goes under, it's the smallest portion of my portfolio, and it's not going to really hurt me. I'd rather you build your house on a firm foundation, and that firm foundation comes from the bottom up. You understand?
Mm-hmm.
Now, if I flip this pyramid around, and I had all the small cap being big, and I had the mid cap, and I had the large cap on top, man, that thing gonna topple over.
Right.
Right.
So
now that's going to have to do with your risk, your assessment as an investor. And I want you guys to really understand this word. If you have a retirement account, you are an investor. You just to know you're investing. You are an investor. You're an investor in the Wall Street. You're participating in the market. You are an investor. Everybody put in console, I'm an investor. And if you are an investor, Sheba, wouldn't it make sense for you to be an intelligent investor?
Yes.
All right, fantastic. She said that happened to me when she Whole Foods and Amazon. Okay, great. Lars, absolutely. Thanks so much, Dara. How are you? Why are large cap CEOs stepping down? Yeah, I'm gonna avoid that question right now because that's gonna get me into some trouble. But let's just say this. How can I say this without understand this? The love of money is the root of all evil. Right? Now we can say that every year there's an assessment done and they see who's doing a good job, who's not. But here's what we really truly find is that when we start seeing CEOs stepping down, who do they replace them with? Normally black folk who take the fall for the company. So understanding that for them to cash out, okay, let me ask you a question. CEOs stepped down because they knew what was about to come down the pike. So they stepped down, cashed out, or liquidated their assets. So it's all about protecting the wealth. The rich get rich and the poor get poor because the rich know, the rich control the media, the rich control society. So of course they know before you and I do. Because they pay to know. So they knew. They stepped down. They cashed out. But ask yourself right now, what do you think they're doing now?
Going about their business.
No, they're not. They're going right back in. You see what I'm saying? They're going right back in. They say, hey, I protect. Listen, I pulled out and I protected my wealth. I built up $5 million, $50 million, and I pulled out and I protected it. So I didn't have this downturn that the rest of America, the rest of the common people, the sheep, the stupid people in this world that don't know nothing about money, I didn't have to deal with that.
Right.
And now that the storm is almost over, and before they know it's over, I'm going right back in with my $50 million, and I'm going to triple, quadruple it because they're freaking greedy. And this happens every decade. 2008, same thing. 2000, same thing. 9/11, y'all think it was, I'm not going to talk about, I don't want to, hurt nobody, my Patriots' heart, but it was about money. 2008, I don't want to hurt nobody's feelings where they had y'all taking all those loans for houses that y'all couldn't afford, putting y'all in bad situations. They knew what was about to happen. They pulled their money out. Stock market, real estate market crashed. As soon as the storm was over, they went right back in. That's why more millionaires are made in a recession than any other time. But we have yet to learn and understand history. It repeats itself. And the good book tells us that there's nothing new under the sun, but we never look back. We got short-term memories.
Wow.
You understand the words that are coming out of my mouth, Sheba?
I got you.
Whew, I told you I'm pissed off. Listen, do y'all understand what's really happening? Listen, my mom, your aunt, your grandmother, they've been working 40, 50 years of their life, and they just got 50% of their wealth taken from them, stolen by these crooks.
Mm.
All right, I'm sorry. All right, you can manage your own account and move your money around daily. That's what I like about. You don't really want to do that. There's no need to move around daily because you're not moving your current money around. You're moving something that you're going to put in later on your next paycheck. So that's a little bit too much with your 401ks. You're an investor. You're an investor. Okay. Whew. Okay. All right. What time we got? 9:11. Look at that, 9:11. All right. All right. Let me show y'all one more thing. Try to anyway. All right. Let me stop sharing real quick. I'll show you one more thing. So you said Vanguard, right?
I believe so, yeah.
All right. I'm going to just try to show you if I can get there. Y'all think it's about some virus. Y'all, we are so far in the weeds, it doesn't make no sense. So here on Vanguard, for example, I can come here, and all I want to do is I want to browse their mutual fund lineup. That's what I'm gonna do here. So they have ETFs and mutual funds. Typically, you're gonna have mutual funds that you're gonna be able to invest in, and we'll just take a look if it allows us to. Okay, here we go. So for Vanguard, for example, Sheba, is this big enough?
I have to turn. Let me turn my phone around and see
It's
if I
a
can.
little small, isn't it?
Yeah, it is kind of small.
I'll just try to read. I'll just try to read what we got. So they got all these funds, right? And this is what you have options to if you just go straight through Vanguard. They got money market funds, tax exempt funds. Now we get to the bonds, right? Get to the bonds.
Mm-hmm.
You see all this long-term treasury bonds, all these different bonds we just mentioned, right? Then you start coming down, you start getting to investment grade. It's going to be investment grade bonds, investment bonds, corporate bonds, okay? Short-term investment corporate bonds. Then you have your below investment grade, which are high yield. You got tax exempt. We'll keep going. Now we get down what? The balance funds. Remember I talked about that? You see that 2015, 2020. We're going to be probably getting to 2045. Now is it starting to make sense?
Mm-hmm.
All right. Then we get down to your target risk, which is going to be more of your income type of funds. Here, wow, look at this. Okay, then we start getting down to your traditional. You see index, balanced, Wellington. Did I skip something? All right, so you got these balanced index funds. Then you got your management. They're gonna manage your funds. They're gonna be paying a little bit more. Global funds. Then you got to your stock funds, large cap, right? Mid cap, small cap. Then you got global funds, bond funds. Then you got global international stock funds. All this stuff starting to make sense now. International.
Right.
Now, an interesting thing, emerging markets, right? Maybe like India or Africa or something. Then you got to look at the specialty funds, like I mentioned, healthcare, real estate, energy. Now, what people don't understand is that for everything that's going to be done for you, there's a cost. That's going to be your expense ratio. The higher the expense ratio, the more money is going to be taken out in order for them to manage your money, because you're not managing it yourself. Then they start talking about your year to date, how that fund has performed year to date. Now, all this stuff I go through more in depth for you, depending on for you and your accounts when you actually schedule a session to be able to say, hey, now I've learned the general scope of this thing, but I need to learn stuff that's particular to me, right? Because you work somewhere different, and it's gonna be individualized for you. So if anybody watching here and you're saying, you know what, I want to go through my own thing. Well, I can help you do that. It's a retirement review, something I've been doing. This was one of my very first service when I quit my job. what I had happened was I started learning about this stuff and I started teaching my peers. And I was like, man, all this stuff we need to learn about this money. So they started calling me the money guy when I was working for Coca-Cola. And I started doing all of their retirement allocations. They come to me, what you doing with your allocations? What you doing with your allocations? And I was like, man, if y'all ask me all that, I need to create a service. And that's what I did. And so I had so many people that signed up for this service, I was able to walk away from my job. And I've been doing this service. Don't do it as much because I do so many other things that relates to investing, but it is available to you. And you can simply go to ERGJ Enterprise on Facebook, and it's in the services tab, set an appointment, and we'll have our initial contact, which will be free. And then if you want to move forward, we're actually going through the full thing for the review. It's $149 for you to do that. Okay, we go through all of this stuff. We go through all of your options. We talk about where you are, your risk assessment, what you're trying to accomplish long term, and all that good stuff as well. Okay, so if that's something that you're saying, I need this, and you know that something is wrong, ask yourself, are you willing to invest to actually fix it? Or if you feel like, hey, I got enough information, I can go do it on my own. Good luck. Hopefully it works out for you. Make sure you retire rich. But I've been doing this for a while. Okay. Sheba, you got any questions?
No, not yet.
Not yet. Okay. So here's the deal, guys. I don't do this just to do this. I do this to make a difference. In the comments below, I'd like for you to share something that you learned today. And Sheba, I'm going to ask you the same thing, something that you learned today. There is a strategy or an understanding from my mentor, Mr. Warren Buffett, says that price is what you pay, but value is what you get. Right now, we're thinking about the price you paid to be here. It didn't cost you anything as far as money, but the biggest thing that it cost you was your time. You taking the time out to learn what you don't know about money. And I want you to understand that what you don't know about money is hurting you, as you found out here tonight.
Right.
Not only think about the cost of for to be here, but the value that you receive for this hour and a half that we've been here. Was it worth your time? So answer this in the comments below. Was it worth your time, and why? Who else is doing this? Using a social media platform to connect with their alumni to make sure, hey, you know something more about money than you did before we connected. And thank God I was able to, God brought us together for me to answer a question on her Facebook post, and it turned into this.
Right.
What did you learn today, Miss Sheba?
I learned, to be honest with you, I learned a lot. I really did not understand small caps, large caps, and medium caps. And basically, how to take advantage of this current situation. I probably would have been like, okay, let me, tighten up. I'm fearful because I don't want to lose any more money, which is one reason why I reached out to you. Is like, hey, I lost $10,000, and okay, I could have did something else with that, but really, kind of being able to really look at my money and know, hey, I could have probably said, okay, well, no, let me pull back, or be a little bit more conservative, and change some things as far as my 401k is concerned. If I had known, but we don't know, I didn't know, but I think I've learned a lot. I really have, and I appreciate your time.
Absolutely. Thanks so much. Wakita, is that what they are doing now, offering SBA loans? I'm not quite sure of that question. What is my advice? My advice is what you pay for. But don't be afraid to view your 401k. You can't tackle what you don't know. So it's your money. Why are you afraid to look at your money? I mean, now you're going to get pissed off. I mean, there's going to be some feeling that's taking place in that good body of yours, but that's a good feeling because it causes us to actually do something. If we don't look at it, we're going to overlook it, and we're not going to be able to fix something if it's wrong. So, yeah, go ahead and get your strength up. You know what I'm saying? Be of good courage. Thou shalt not fear, right? Meditate on my word day and night, and you shall have good success, right? But I've shared some things tonight that I think should give you some indication as to advice. I just don't do advice because this is entertainment and educational purposes only. But if you really want advice, that means that you actually, book yourself an appointment, right?
Right.
Book yourself an appointment. All right. Again, thanks so much. All right, fantastic. Catch up on these comments. You're welcome. Thanks so much. I learned about small, mid, large cap companies. Now I can look at my credit card account to even see what I have because I don't know. Look at this. I don't know. I learned so much more to learn. Ooh, oh Lord, absolutely. No more wool over our eyes. The use of the same scare tactics over and over again. right? I need to pay attention to how many money is invested in my 401k. It's worth my time because it allowed me to know it's smart to put my money outside of my 401k with an IRA. This may be good time to move it around. All right. I've learned that the variety of options for retirement and how to better understand these options. I also have a better understanding of possible ways to diversify my portfolio even better. And let me last say this, guys. Some of you guys are in positions where it's time for you to actually connect with a wealth manager. You need an overall wealth assessment. When we're talking about that, we're talking about your life insurance. We're talking about your investments. We're talking about your will. We're talking about your estate setup. We're talking about if you're really going to leave an inheritance to your children, you got to set it up. It can't be just talk. It can't be just a good scripture. It can't be something that you just quote all the time. It's something that you actually have to work. You have to set your children's children up for success. Right? That means that you have to plan. If you're going to set your children's children up, that means that you're planning about 50 years ahead. That makes sense? We're talking about 4 scores, 2 scores. You're planning about 50 to 80 years ahead for your children's children. Now, we having children younger now, so let's just say 40 years. You have your children at 20, they have their children at 20, now you're 40 years. So that means that you being a wise adult, the mature one, the one who's now been through life long enough to say, I understand I need to do something, you planning 40 years in advance. Now, how many guys know that's difficult? It's hard for us to plan 4 days in advance, let alone 40 years. Right? Now, am I lying or am I lying? Your 401k lost money, but keep investing and buy low. Absolutely. Thank you. I don't think the look make change in my 401k yearly. That's why we're doing this, right? Large cap versus small cap versus medium cap. Man, Sheba, Queen, Sheba, by the way, QS. Any last word for the piece before we close this thing out?
Well, I'm just gonna say I'm appreciative of everybody that showed up, and I'm just appreciative of just you giving the knowledge, willing to share the knowledge. After so long, when you get up a certain age, you think about retirement, and so I'm just so appreciative because, like one of the young ladies said, I'm able to at least go back and look at my 401k and really know what it is that I'm looking at. More, some of us, I don't know, but me, it was like, okay, is my 401k going up? Is my 401k going down? It wasn't really about the quality of my 401k. What is it being invested in? Things of that sort. So I appreciate that because now I can go in and kind of look. I can see, like you stated, the medium caps, the small caps, the large caps, and kind of be able to decipher that. I may not know a whole lot of it, but I got a little bit more knowledge to kind of look and see what I'm looking at. So I'm appreciative in that.
Let's change the verbiage too. It's not just your 401k, it's your money. It's my money. See, right. If we lose $20 in the couch, we're gonna be looking all around. Where are my $20 at? You lose $10,000 in your 401k, you like, I don't even want to look at it.
Exactly.
That's crazy. That's your money. Hey, in the comments below, I'd like for you to give me a number. How much was something like this worth? How much is something like this? You like, wait a second, how much do you think you should have been paying for this session? Now, Ms. Dara, you can hit the replay button. I ain't taking it down. You can hit the replay. Watch it over again if you like to. I ain't that kind of guy. Put it out there, y'all can have it. Right? You can share it out, whatever. Don't matter to me. Right? Because what I understand is most people simply won't do nothing with it anyway. So it don't matter. Right? But for those that watch, you say, man, this session like this, how much would a session like this cost if Brother E didn't care enough to do it for free? Right? Price what you pay, value is what you get. What's the value that we got here tonight? You're in a good place. You follow Evan Expertise, you will retire a millionaire. Fantastic. Thanks so much. How much? Something like this. Bringing it to the community for those that want to learn, those that want to protect their wealth, those that want to grow their wealth. They showed up. We find all types of stuff to do with our time. Right? Well, I'm telling you guys, once you make education more valuable than entertainment, things will change. It's so difficult to do. Once you make education more valuable in your life than entertainment, things will change. $200, $250. Anybody else? Give me a number. All right, I got a book club to do. All right. Anybody else? All right, Sheba, I want to say thanks so much for joining us here tonight, and everybody else. Hopefully, you got great value out of what we do. I'm on 8 a.m. Eastern Standard Time, Monday through Friday, for the Money and Power Show. We talk about money, we talk about power, politics. We take a look at the market. We've been covering Corona and all that stuff. You can always tune in. It's always available for replay. If you don't, make sure you hit the like button, subscribe button on YouTube or Facebook. I still got about 200 more YouTube subscribers I need to get to before I get YouTube to pay me, so that you don't have to. So you start talking about me doing something for free, well, go ahead and make sure you hit that subscribe button on my YouTube so I can get YouTube to pay me so you don't have to. Then I can start giving y'all all the content. But until then, you know what I'm saying? A brother got to eat too, right? Brother got to eat too. Man, I want you guys to remember this, man, that it takes a village. It starts with us. Let's build as we climb together. We all we got, beautiful people. Matter of fact, we all we need. And thank God. I mean, truly thank God that that's more than enough. Until next episode, you know what time it is. Mr. DJ, hit the music.
The new Black Wall Street. Thanks you for joining the show. We gave a lot of great tips, but it's time to go. Take the knowledge we shared, hope you use it and grow. We will see you all there at the next episode of The New Black Wall Street. The New Black Wall Street.